use your current network to help you grow your real estate business. And then once you feel comfortable, start backing off to the point where you can leave.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, we've got the North Star Real Estate Conference coming April 24th and 25th in Minneapolis, and this conference is going to be for everyone. We're covering the gamut of real estate. If you are just beginning, this conference is for you. If you have 100, 200, 500 units, this conference is for you. If you want to get into commercial real estate, this conference is for you. And the best part about the North Star Real Estate Conference is the networking. The networking is phenomenal. We've got high performers there. We've got amazing speakers and amazing attendees that are going to be adding a ton of value to your business. We can't wait to see you there April 24th and 25th. Check it out. I'll see you there. Welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me today, excited to have back with us Vikram Raya. Vic, how are you doing today?
Absolutely great, Todd. Good to hear your voice.
Awesome. Yeah, well, good to catch back up. I wanted to have you back on the show for a couple reasons. First of all, you're going to be speaking at our upcoming conference, the North Star Real Estate Conference in the Twin Cities, April 24th and 25th. So I'm super excited to have you there. Get to see you again, man. It's been a while since we've actually seen each other face to face. So I'm super excited to have you. And then just have you share with all of our audience about really how to do some amazing things. And I want to talk about some of those amazing things that you're doing today. And a little bit about Vic, and I'm not going to go into detail because you can go back to, and I need to have that episode. I'll give it to you at the end because I don't have it right now. But man, it was a long time ago that you were interviewed, and excellent hearing your story. But why don't you give our listeners just a quick little snapshot about your company or companies and what you're doing, what your focuses are today?
Oh yeah, Todd, you know what? I want to thank you for hosting the North Star Conference. I think it's one of the top Midwest real estate conferences out there. It's done by people who actually do real estate versus people who sell real estate, and that's why I really appreciate that. I'm excited to be part of that. I think your company has really done a great job of, really not only buying key assets and properties such as multifamilies, but also helping other people get started in the business, which is huge. So thanks for all your help, man.
Yeah, appreciate it.
So I'm, really privileged to be on this podcast. I think Todd is one of the, he really asks really good questions and really helps dissect what makes people successful and helps that distill that down to his listeners. And so just a little bit about me. I'm a doctor by training. I'm a recovering cardiologist. And so I practiced up till 2018, but I had this bug called the real estate bug that just bit me in 2012, and I've been doing real estate sort of parallel. But at some point, it made sense just to go full time, and I started a company called Viking Capital with one of my really good buddies, Ravi Gupta, and we started that in 2015, and that was just going to multifamily, and so we learned about syndications. And we started helping other people with their deals, which is a good way to get started for all those who are interested in that kind of thing. But then after about 2 or 3 deals, we knew we could do this on our own. And so we really took it to heart. And now it's about 4.5 short years after we started our company, and we've done 13 multifamily transactions. Wow. We've purchased, over about 3,000 units, and we've raised about $35 million of money, of private equity. That's and awesome. So, it's been a roller coaster ride. It's been fun. But to be honest with you guys, one of the biggest things is mindset. And we'll talk about it later in the show, but really knowing that this is possible, that you can do it. And then if you follow the right strategies, they say success leaves clues, and following those success patterns of others, you guys can also do, this and even more than this. And so that's where we're at. And then I really am passionate about all other things as well. There's a term that I learned when I was in school called the Renaissance man. And it really it really stuck with me very till this day, that there's a man like an Elon Musk or someone who's sort of has so many multiple passions or multi-potentialites that he can, run a company in health and wellness. He can run a company in real estate. And so I'm trying to follow in those footsteps, and I've created a health and wellness company called the Vitology Institute. It's located in DC, and it's a health optimization institute. And what that means really is we take people from where they are and we like 10x their health, whether that's anti-aging, nutrition, fitness, wellness, getting them off pills, medications, and really making them feel phenomenal. So anyway, those are my two passions. And again, I'm happy to be here on this podcast, Todd.
So you're making people wealthy and healthy at the same time.
There it is, man. There it is. It's what the two people want the most, right?
Yeah, so. It is. Definitely. You're 10xing both of them. So that's really cool. And I love that you've got that growth mindset, that mentality, that abundance. And I know you and I are both subscribers of Trevor McGregor, who will also be at the conference. And he preaches both of that. So really cool. Take us through kind of where the company is right now. You mentioned kind of where you're at. I know you're in DC. You've got a property or two there. A lot of your assets are in Atlanta. What type of deals are you buying right
now? So Todd, we were actually in a sort of a quandary period. We're at a sort of a branch in the road. And the question was, and I'm sure this is on a lot of your listeners' minds.
Yeah.
Is the real estate market too hot? Is it too heated? Are we in a bubble? Should we back off? Should we let go of the accelerator? And, first of all, I think multifamily is a team sport. So if you're in this kind of business, it's nice to have someone that you work with, whether it's not necessarily a partner, but even like a right-hand colleague. It's really important, because to raise capital, to find deals, to source deals, to get debt, to do the asset management, and to do it all again repeatedly, it's hard to do as a solo project. So definitely consider having either a right-hand person or even a partner.
Yeah.
But back to your question of, where we're at, and, it really is where we're at mentally. I was thinking, should we slow down? Because that was sort of our thought process going in. But, after speaking to some of the industry experts and looking at the Marcus Millichap 2020 multifamily housing outlook, which I'm going to send to you if you don't already have it, Todd. That might be something you share with your listeners in the notes. But the fundamentals of our economy are still strong, and this is even despite the coronavirus that we're scared that we just saw the last 24 hours. But though the cap rates have decreased, one thing to remember is the Treasury has also dropped as well. So what that means is there's still a delta between the kind of debt you're getting and the kind of cap rate you're buying. And so as long as that exists, there's still reason to buy, because you have good leverage. Number two, the employment is so strong in most metropolitan areas, and that's really what's driving a lot of the growth. And the only thing slowing down employment is really the fact that they can't find enough people to hire. Part of that's due to the immigration issues and other things. So those are two strong fundamentals. And millennials, which we all talk about, right, Todd? Millennials, the interesting thing is they want to rent. They don't want to buy. And so if you're in a housing market where you're selling homes, you're renting homes or renting multifamily, that's a great piece of news. And so knowing all this is allowing us to actually put our energies back toward acquisition. So we're going to go on an acquisition cycle now, and we're going to acquire about probably 3 to 4 assets this year. And so we have one under contract in Washington, D.C. It's a mid-rise D.C. building, A-class building, the first A-class we've ever bought, but it made sense because it's right next to a metro. We're getting it for a little bit of a discount. A 5 cap for an A-class building in D.C. is pretty hard to get.
Yeah.
And then the loan is just so sweet, and it was even more sweeter before all the interest rates dropped. But when we were getting it under contract, interest rates were about 5%, and we get it for 3.2 HUD loan that we're assuming for 35 years. And so those are the kind of deals where you really want to buy. And then a lot of people talk about value add, Todd. They say, hey, value add, that's the way to go. But the new value add is not necessarily value add in terms of like, hey, putting some lipstick on a pig or adding some granite countertops. It's like, what's the creative exit, or what's the creative loan process you're going to get on it, or what's the creative way you can structure the deal? Because that's the way, that's what's the new value add. And so for us, the interesting thing is we're going to do something called a condo conversion. So we're buying it as apartments, it's zoned as condos, and we're going to sell it as condos in about 7 years. And so instead of getting a 2.2x multiple, which is still very good, we're probably going to be able to get closer to a 3x multiple on this deal.
Wow. And that's the DC deal that you mentioned.
That's the DC deal. And we finished the deal in December in Atlanta, and it was a 192 unit, $26 million project that we acquired. And we're really excited. That's a typical classic value add, but it's in a really strong North Atlanta sort of affluent suburb market. And it's a strong B deal that we're going to make into like a sort of an A- feel.
Interesting. So Vic, I don't think I asked you this the last time we spoke on the interview, but you were juggling being a doctor and buying real estate. I mean, you built a pretty good company through that. Like, what are some, key things? Like, how did you do? And you had a family, right? So you're doing all this stuff. What does it take to do that? Because I think a lot of people are going, man, I can't get started in real estate because I've got this full-time job. Like it's holding me back.
Yeah, that's a great question, Todd. And, it's a question that we all face at some point. Like, how do I make my real estate career my main career without putting my family at risk, right? Because I think a lot of your listeners have family, they have kids.
Yeah.
They got they may be a two income household, and their income is important. And so I guess my advice to you all would be, know what you want. Clarity is power. As Tony Robbins says, clarity is absolute power. So knowing exactly where you want to be. So when I started cardiology in 2011, I knew that I wanted to exit by the age of 40. And so I already had that in mind. So I was like, how do I do that in a safe way where my wife doesn't kick my butt, And so it was like, it was nights and weekends doing a side hustle, and you got to put some energy and time into the side hustle until it becomes something of significance to where you feel comfortable sort of backing off. And so I was not, even though I was taking risk, it was calculated risk. And there's something called asymmetric risk reward, right? You want to take risk, but the reward is so much greater. So I started backing off. I went from like 5 days to 4 days, but then, still did the real estate thing. And then the thing is, guys, most of you guys are working in really good careers and really good jobs. Use that to your advantage.
Yeah. I
would say 30%, maybe 40% of my investors are doctors. One, most doctors, they don't have the time to invest. Two, they don't have the skill set. And three, they just want to just invest with someone they trust. And so it was easy for me to convince them and compel them to say, hey, look, I can help protect your investment and grow quicker than the S&P 500. And they're more than willing to invest in it with us, then, especially after we started getting a track record. So guys, if you're an airline pilot, if you work in the school system, if you're, if you're a consultant, you're working computers, whatever, use your current network to help you grow your real estate business. And then once you feel comfortable, start backing off to the point where you can leave. It took me from 2015, it took me 3 years before I finally felt comfortable to back off and actually let go of cardiology. So the same can be true for you guys. And obviously, build up a little bit of reserve too. So when you do leave, there's a little bit of, buffer before you start going to real estate full time.
Yeah. And I think that's really, really valuable because, look, I was able to quit with a very low paying job. It didn't take me very much, but especially those out there that have a good paying job. And I'd imagine doing cardiology, you're making more than 30 grand that I was making as a teacher. So you've got to be able to replace that income. You've got to be able to do it, but use that for your advantage too. You're making good money doing that. You are likely being able to put some of that money into the assets you are looking at. And you're surrounded with other people, and doesn't matter what you do. There's always people that have money within, your network of what you're doing. And it's all about talking to people. You didn't just keep your mouth shut.
Yeah, and exactly right. So like, we'll just use Todd's example. He was a teacher. So you're like, okay, well, teachers, $30K. I don't get it. See how they're going to help us. Well, yeah, he's a teacher, but who does he know at the school? He knows principals. He knows superintendents.
Yeah.
He goes to meetings, right? There are vendors who probably come to the schools, and parents, all sorts of people he can work with, Parents, exactly. And so,
Mhm.
PTA meet, chamber of commerce meetings. There's so many. There's money is surrounding everybody. We just have to have the courage to use your voice, to let people know what you do, to be confident knowing that you can help them, and then just being authentic. And we're not talking about salesmanship. This is more like it's your ethical obligation, duty, and responsibility. This is what Grant Cardone says, right? Your obligation, duty, and responsibility to help other people get what they want, and they'll help you get what you want. So
Awesome. You're in DC.
I'm talking about balancing family, Todd. You're talking about balancing family.
Yeah.
It's super important because if you sacrifice everything for your real estate dreams, and then your family gets you don't have a great relationship with your kids, you and your wife's relationship is strained, or your girlfriend or whatever, what's the point, right? So when Todd's talking about trying to be the complete picture, I mean, he's an example of that. He's an excellent family man, excellent spouse. He's well-rounded. He gives back to charities. That's the kind of person you want to be, because it makes the journey much more fun.
It does. And like you say, you want their support. You don't want to do it, and cut them out. I think that's a big mistake that some people make, is they're so focused on being successful and they don't take their family along for the journey. They leave them behind, and then they wonder why it all kind of fell apart. Hey, we've got the North Star Real Estate Conference coming April 24th and 25th in Minneapolis, and this conference is going to be for everyone. We're covering the gamut of real estate. If you are just beginning, this conference is for you. If you have 100, 200, 500 units, this conference is for you. If you want to get into commercial real estate, this conference is for you. And the best part about the North Star Real Estate Conference is the networking. The networking is phenomenal. We've got high performers there. We've got amazing speakers and amazing attendees that are going to be adding a ton of value to your business. We can't wait to see you there, April 24th and 25th. Check it out. I'll see you there. So you're in DC. A lot of your investments are in Atlanta. And again, like I said, you're working full time. How did you go about building those relationships with brokers to be able to get deals, build that trust? Like maybe a couple key factors, key ways, and how do you build those relationships being out of state?
Cool. I'll tell you some secrets and tips, and also tell you a very interesting story. So, it takes twice as long as you think to form a relationship with a broker.
Yeah.
Our first deal, I was talking to a broker for 3 years before I finally got it. And so brokers are humans. They want to know you. They want to like you. They want to trust you. You've heard all that.
Yeah.
But how does that happen? You got to put time in. Yeah. Like I would call the broker. I would analyze his garbage deals he would send me. I would give him proper feedback. When I told him I was going to put an LOI, I would put an LOI, even though I didn't know if that was the deal for me. And by activity, he realized I was serious. I'm not going to go away. And then eventually I would use other people's success to help me move forward. So as I was raising capital for some of the people who are well known in Atlanta, that by inference that, hey, this guy's legit too. And so I go, me and my team, we've just bought this deal. Even though, I just raised capital for that other project, I was able to leverage that relationship. And so that you got to start from somewhere. And then at some point, then they trust you, and then they actually start giving you deals. But then you got to actually be ready to perform. Yeah. So they gave us our first deal, which was a 118 unit deal in Atlanta. I think it was like we bought it for $4.5 million, and we weren't the first choice on the deal. In fact, we were the second choice. But what happened was something happened on the property. Actually, someone got killed on the property, and the group from New York who had under contract, they bailed. And so he came to us, and so we had a choice. We're like, well, are we going to let this anomaly, because overall the crime rate in that area was very good. It was just a random occurrence. Yeah. And so we had to sort of have a gut check. We're like, are we going to take this deal down where something major happened and maybe have a first shot with this broker and do something, or back off? And it was a true gut check, but we decided, let's do it. And I'm glad we did, because 2 years later we sold that deal for $13.5 million, because we ended up buying the one next door.
Wow.
putting them together. And we gave our investors a 40% return, annualized return. But it was a lot of stress. It was a lot of headache, a lot of late nights and questioning, but it was all well worth it, right? And so sometimes you have to do this. But here's another trick that I found. Everyone likes gifts. People like gifts. So what I did was when the markets where you guys are investing all over the country, they're pretty hyper competitive. And there are, really known folks out there that are really throwing out some strong offers. And so how do you stand apart? So here's what I ended up doing. We were at a moment where we were getting to the best and final of many deals, but we couldn't find, we weren't able to really close the deal on any of them. After about 6 months, I got frustrated. So I flew down to Atlanta and I showed up at the liquor store. And at the liquor store, I go, hey, I need a specific type of liquor. And he's like, which kind? I'm like, I need Dom Perignons. For those of you who don't know, Dom is considered like sort of the king of champagnes, if you will. And it sort of has that, it's in rap videos and things like that. But it's sort of like, it's sort of a premium kind of liquor. So I asked him for 10 Dom Perignons. Okay. So it's going to cost me something, right? That's what, $200 each, maybe $2,000. So so I have these in my vehicle and I'm going around and I meet the top 5 brokers in Atlanta. And literally I show up to them, we have a great conversation and I'm telling them, we're ready, we're buyers, we're serious, we can do this. And, they show me deals. But before I leave them, I give the senior broker and the junior broker a Dom. And I'm saying, this is to celebrate our future deals together. And then the following week, we got 2 deals, which we ended up closing on one of them. So,
little Dom Perignon.
The Dom Perignon strategy. So you don't have to buy Doms, but guys, small tokens of appreciation, mean a lot to brokers. And I think there's a story where someone was telling me that one of the brokers was having a baby, and one of the investors actually sent him a baby gift of some sort, and it meant so much to that broker that he made sure that the guy got the deal and the next deal. So things like that do help, and they remember you. And then it's not just about the gifts. You got to actually deliver on what you're saying you're going to do too. So.
Yeah. But I mean, like you said, setting yourself apart, I think that's what the importance is, setting yourself apart. And once they start knowing you, liking you, trusting you, thinking, hey, these guys can close on deals, that's their life. That their livelihood is getting deals closed. And if you come to the table and don't close on a deal, that could be a big difference in their annual salary that year. They might not get another opportunity if you end up messing up. So they're very picky and wanting to get these deals done. That's awesome. I love the Dom story.
And here's one more hint. If you have one broker that trusts you and likes you, you'll be very financially successful in life. If you have 2 brokers, that'll retire you. 3 brokers is called legacy wealth. So that's all you need to be successful. It doesn't take much. All you need is one broker to trust and like you and start giving you deals that are legit. And if you just close on one of them, then that broker's yours.
So in your market or markets, how many brokers are you building strong relationships with?
So in the Atlanta market, we have 5 brokers that we really trust and like and work with. Of those, we've already done deals with 2 of them. And so those are they're sort of golden, and we'd love to work with a few more, but you only need one, guys.
Yeah. And that's the key to remember is you don't need to necessarily build a relationship with every single broker that you might have a deal. You want to build, it goes both ways, right? You want to build a relationship with brokers you like and trust as well.
Absolutely.
Yeah. I want to talk about, about asset management, about managing these properties. What are you guys doing to separate yourself from everybody else?
So we can go sort of the nitty gritty, or we can go sort of high level, but let me just give you some tools. Whether you're asset managing many multifamily homes, single family homes or a multifamily asset, you need a platform to sort of store and manage your projects. And so whether that's a Trello, an Asana, something like that, is very helpful because you want to sort of assign tasks to people. You want to make sure you're tracking their progress, and you want to make sure the renovation for the roofs is done then you want to make sure that you're bidding out the contractors. And you want to see all these moving pieces in one sort of frame. It's hard to do it on an Excel spreadsheet. So I really do like one of these project management tools. And we personally use Asana, which is free, up to about, I think, 15 members. So definitely recommend that. Number two, we're the asset managers, but we manage the property management company, right? And so we don't have our own property management company, so we use third party. Yeah, I think it's very important. Until you own like, I don't know, 20, 30, 40 properties, or you own like multiple properties, one city, it may not make sense to start your own property management company.
Yeah, for sure.
We've been through about 4 or 5 property management companies. The one we like the best, they're phenomenal, and they're phenomenal for so many reasons. One, they treat the property like themselves, like they own it themselves. Number two, they bid out all the deals for us. They give us their best thought process, and then they haggle with the final vendor for even a couple more points, off the price. And then they're even willing to do our distributions for us, which is huge. So we syndicate our deals, which means we raise capital from other investors, and then we pay them distributions, whether that's monthly or quarterly. And so what we found is it's nice for us to do it, but it's even better when they can do it for us. And so it really offloads some of the bureaucracy and then some of the, the upkeep. And so really finding that, and we all know Joe Fairless and his company, Ashcroft Capital. He's also the host of a really popular podcast. But one of the keys to success when I spoke to him was, he said that not having the right property management company would have been disastrous for his company. And so he found one company, and now all deals of that company all his deals go through that one property management company. And so we finally found something similar like that in Atlanta, and we love them, and we're going to use them for all our properties and moving forward.
Yeah, that that right there is powerful, and I mean 100% the case. I've had to get rid of property managers, and it's never pleasant, right? We never want to get rid of property managers, but having the right company is so important. One thing I found is you also have to look. Okay, the last time I fired a property management company, I had to look within, like, what did we do wrong? What do we need to do right to we have to set our property management companies up for success, right? And so how do we do things to set them up for success? What are you doing to set them up for success? Not just assuming they're going to be perfect from the beginning.
Yeah, I mean, I tried to avoid going to the school of hard knocks, but I'm one of the top students there. So, and in that school, you learn what not to do, right? So
yeah,
we've sort of had like a C class property management company when we started, and we moved on to some of the B class property management companies, and they're good, but it's really understanding, setting expectations. What is their threshold for calling you and involving you, and what's their expertise, and how are they a value add kind of property management company? Are they just maintaining high level assets? Are they, what are they good at? And then really making sure your company and their company really mesh well, and really having a strong relationship with your regional, which is sort of, they manage multiple properties, and then your actual office manager or your property manager on your property. And so we've had to actually change property management companies before, and that's a very painful experience. It slows down progress.
Yeah.
It adds cost, and it also creates doubt in the mind of your investors. And so you want to avoid all those by really honing in on what you want, what the expectations. So by the time we start a deal, like we're ready to actually take the deal over, we already know who's going to do what, what projects we're going to do, how much we're going to spend, what's the timetable, how quickly can we turn things, what's the rent bump we can achieve. All of that's almost essentially done. And so there's no surprises when we take over, and we're really off to the races going fast. If you guys remember how to, pillars of wealth creation, that's what Todd is teaching you all. That's sort of the motto. So the quickest way to generate wealth in multifamily is to do your value add acquisition, value add project very quickly. It's a hockey stick in terms of appreciation. So in the first 24 months, if you do the renovations, get the units up and running, and really make everything pop, your value of the property jumps so much.
Yeah.
And then you're set up for either enjoying the cash flow or even exiting very quickly.
Yeah.
And so having the right team in place will help you do that.
Awesome. What's your plans, Vic, going forward? What's your company plans, growth? Where are you trying to go?
I wanted to share something quick, Todd, before I get there.
Yeah.
Like I told you guys, we were in a dark place, maybe 1 to 2 months ago, where we weren't sure about where to go with the company, and in terms of success and balancing multiple priorities. Even though I'm speaking of confidence right now with you guys, maintaining that confidence is an effort. And so
Yes.
I wanted to just do a book recommendation to everybody out there. This book literally changed my life. It's by Hal Elrod, and many of you guys may know it. He wrote a book initially called Miracle Morning, which was good, but he wrote a second book, which is even better. It's called The Miracle Equation. And the premise is really unwavering faith plus extraordinary effort can create miracles and create, stellar success. And so that book really sort of made me rethink things and how to really approach life. So, I really know what I want. I really want us to grow. I want us to become, one of the top multifamily syndication companies in the country. But I want to do it on our terms. And so we're excited about maybe growing in Atlanta, doing some deals in DC. But I figured it is also, don't choose too many markets, guys. Choose one market and become the owner of that market.
Yeah.
And really plow your resources into that and really be known in that one market. And only once you feel really comfortable in that market are you ready to go to the second market. I find a lot of newbie investors, they're doing a deal in Kentucky, then Tennessee, and then they're something in North Carolina, and they don't know the market, they don't know the brokers, and they're just spinning their wheels, and they don't get traction. In this type of market where it's hyper competitive, you want to know a market, own a market, and just really, go out there. And if you find difficulty in the primary markets, consider some of the secondary markets.
Yeah.
Okay.
Yeah, definitely. Awesome. All right. So we're going to wrap up here. Do you have another? Well, you've already recommended a book, so I don't need to ask you that. So my last question is, what are your 3 pillars of wealth creation? I don't think I asked you this the last time.
Yeah, that's a great question. 3 pillars. Let me think about that. I think it would be your mission. Figure out what your mission is in life, and make sure that you're creating your path in concordance with that mission. Number 2 is you need a team. From way down to a virtual assistant you can hire in the Philippines, all the way down to a life partner who loves and supports you and enjoys what you're doing, down to a business partner who can support you and have your back and have complementary skill sets, down to a mentor or coach like Todd, who's a coach of a lot of real estate investors out there. So all that's important. So team, your mission, and the final thing is faith. Having the unwavering faith that you will get there no matter what. It just may take longer than you think.
Awesome. I love them. How can our listeners get in touch with you?
Yeah. We have our website, vikingcapllc.com. That's VIKINGCAP LLC.com. That's the best way to get a hold of us. We're also on, I'm on Facebook and Twitter myself personally, Vikram Raya. And so you'll be able to find me there.
Cool. Well, Vic, really appreciate it. A ton of value. I love not only how humble you are, but just very well spoken and have a lot of good value and insight for our listeners. And thanks for taking us, by the way, through the struggles that you guys have had, because a lot of people don't like to open themselves up to that type of stuff. And I've had doubts and struggles at the same time. And it's sometimes hard to tell people about, because you want to always show that you know exactly what you're doing, right? I appreciate you taking us through that and opening up for it. Really, really, really powerful stuff there.
Thanks, Todd. I'm looking forward to the North Star Conference. I'm looking forward to spending more time with you guys. Guys, thank you for having me on this podcast, and I wish all the best of luck to all the listeners out there.
Yeah, definitely looking forward to seeing you in a couple months.
All right. Cheers, man. Thanks.
Take care. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. So rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.